So good morning everybody. Good afternoon. We are in this afternoon where I am now. This is afternoon. So today's webinar is going to be a very good one. We are going to look at purely whatever the chart is doing, and then we make decisions based on what the chart is doing. So what that means, that's called price action. If you find yourself analyzing charts without using any indicator, indicators are basically, guys, if you find yourself trading without using any indicator, then what that simply means is you are trading price action. So price action is chart movements, price movements. Anytime the price moves to a particular direction, make decision based on what the price is doing and not based on what an indicator is doing. So today, this is a continuation of what we looked at previously. Some few days ago, we actually talked about price action, but we mentioned very little about it. Today we look at like certain few steps that you need to follow to be successful when trading price action. So the very first thing that I want to mention is that to be successful in price action trading, there are things you need to know. There are just certain things you have to know. You cannot just be successful simply by orthodox or whichever means you choose to call it. You can never be successful unless you know certain things. And the most important thing which you have to know is you have to know the names of candlesticks. You have to know how various candles are called. That's the first thing. You have to know, if you look at this chart, so if you look at this chart, first of all, you have to know what individual candles actually stand for. That's where success in price action begins. Want to trade this correctly, understand exactly what each candles means. So far there are like 12 names which are common. There are like 12 candles which, if like, these are the ones that are mostly seen, but overall there are more. There could be more than 100. So you have to know how to differentiate these ones. What's the name of this candle? 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 What's the name of this one? What about this one? You have to know them, how they are called individually. That's the first thing. Know the names of these candles properly, and also know when they are useful. So like I'm going to look at just very few names. I'm going to look at a pin bar. First of all, I'm going to look at pin bar, and then I'll move forward and also look at inside candles. Then I'll look at engulfing candles. Then I'll look at something known as dark cloud or something like that. And then I think we'll finish there for candles. Then the next one we're going to look at is how to draw your levels correctly, because these are the most important things. If you want to trade price action correctly, understand what candles stand for. So the first one is inside bar, pin bars. Pin bar is anything that looks like this, anything with a small body on one side and a very long tail on the other side. It's actually referred to as a pin bar. Look at this. I have this here, and then there's a tail which looks like this. This is an inside candle. This is a pin bar. Anything that looks like this is known as a pin bar. Anything that looks like this is known as a pin bar. And then we also have this. The color may be different, but they all mean the same thing. If you find something like this on a screen, even if the color is green, all it means is that the price should proceed to the upper side. That's the meaning. Then we have this. This is a pin bar. This should be green because they are pointing upwards. We have a very long tail at the bottom and a very small body. Then there's a very small tail at the very top. That's a bullish pin bar. And if the opposite is true, that you have a very big tail at the top, but then a small body at the bottom, like this, then this becomes a bearish pin bar. If you have something like this, this becomes a bearish pin bar. And what it means is that the price should proceed to the lower side of this. So have that, the color may be different, like that. Then you also have this one, and it has a very long tail at the very top. We have a very small tail at the bottom, but the body is relatively smaller compared to the tail we have on the top. So just look, compare the body of this one, the size of the body, the length, and the length of the tail above it. You'll find that the body actually goes inside the tail like 3 to 4 times. So that's what makes a pin bar a good one. The first thing that you have to know if you want to trade purely price action is this candle. The 4 candles you have drawn here, these candles, the first 2 means the same thing. They all point downwards, and it means the price is going to the lower side. The next 2, which is this one, all of them point upwards, and what they mean is that the price is proceeding to the upper side. So when you find this on your screen, just know that there are chances the price is proceeding to the upper side. This is the first thing. There are very, very high chances that the price is proceeding to the upper side. Or if you see this, it means the same thing. The price is proceeding to the upper side. Just look at here. Have this. It's a bullish pin bar. There's a very long tail and a very small body. Then we have a very small tail at the very top. And there's this. There's nothing. There's nothing. This looks like a pin bar, but it's not a very good one because the body is along the same size as the tail, so we don't consider this. But we have this one. It looks good, but the body goes into the tail like 2 times. That's correct. So that's a pin bar, bullish pin bar. What followed? The price actually moved upwards, some pips, though not much, but it did move up. We also have this one here. Then we have this. This was a very good pin, but just look at the tail which we are having here and the size of the body. This is a buy, and then we also have a bearish pin bar, which is this. What this stands for is that the price should proceed to the lower. So just notice something. I've mentioned that anytime you see this kind of candle, it means that the price should proceed towards that direction. But this does not happen always. It's not all the time that this happens, that you see a pin bar that the price will go that direction. Sometimes there may be a very, very good pin bar, but then the price does not go in that direction. So this brings us to the next thing. When you see something like this, a pin bar, ensure that prices previously were actually closing below the lows of the previous candle. So that confirms the direction. If you have a pin bar, which means the price should proceed to the lower side, previously ensure that the candles which you are seeing just in the recent past, they were actually closing below the lows of the previous candles. So like this one, if there's a pin bar here, this candle is called indecision candle, doji. This doji means that the price should proceed to the upper side, the setup, which is this. Then that setup means that the price should proceed to the upper side. But to confirm that we are indeed continuing to the upper side, wait for price to close above the highs of the previous candles. So what that simply means is we could not have bought it immediately here, but we could have bought it here after this candle, because this is the only candle which the close of this candle is above the high of the previous candle, which means you would have taken a buy. So far you're supposed to be holding on to the same buy, and we expect price to proceed up to maybe some level which is here. So the same thing applies for pin bar. To confirm the direction of a pin bar, wait for a close below the previous low. That confirms that direction. So you don't just enter trade because there's a pin bar. This is one place where most of us go wrong. You'll find somebody knows about pin bar. When they see a pin bar, the first thing they do, they enter trade, which is correct. it is good to enter trade when there's a pin bar. But then what confirms that direction is when candles, even on a 15 minutes, begin to form low close below the low of the previous candle. I'm not talking about the low of the, I'm talking about the close, a candle closing below the low, the previous candle, that confirms the direction. So monitor that properly. Just look at this here. What I mean by a candle closing below the high of the previous one, I mean a candle closing above the high of the previous one, or a candle closing below the low of the previous one. Look at this from this point. We had this candle here which looked like a pin bar. But then the next candle is actually an inside candle, and then it closed above the high of the previous candle. What that confirms is that we are supposed to continue to the upper side. Therefore, you need to look for a buy immediately when this candle opens. Yeah. So if this was a good pin bar, assuming it looked like this, then the next thing that we see is that the candles are now closing above the high of the previous one. That confirms that direction. You're supposed to start looking for a trade in that direction. The next candle, which is this, does the same thing. It closes above. This one closes below, but does not close below the low of the previous one. This one does not close below the low, does not close below the low, and instead this one now closes above the high of the previous one. This confirms that buy. So if you had a buy based on this candle, assuming this was a very good pin bar, if it was looking like this, assuming you had this candle as a very good pin bar like this, then the next candle closes above the high of the previous one. That means you're supposed to buy the next one. After you buy it, you remain until when this happens, there's another close above. That's still a buy. Still a buy. We are still into the same buy. We are still into the same buy. And then we don't exit because there's no close below the low of the previous one. This is just an inside candle. It closes even higher, continues up, and this one even closes higher. But then the next one does not break above the high of the previous one. So what this means, we probably could have taken this buy here, been able to hold up to this point before the price retraces and even starts to close below the previous. So this was the correct place to exit from. After this candle which has now closed below the low of the previous one, you exit. But you took the buy correctly based on the fact that this was a pin bar. This is one way you can be able to enter trade successfully using a pin bar. We don't just enter trade because there's a pin bar. Ensure that if you see a bullish pin bar, ensure that the previous, like the current candles, are actually closing above the high of the previous candles. And if you see a bearish pin bars, ensure that the close of the current candles are actually below the low of the previous ones. That's the only thing which confirms the direction. If you can't find that correctly, don't do anything. If you can't find that correctly, like if you can't see that correctly, do not do anything even after you see a pin bar. If you can't find prices closing above the high of the previous one, do not buy it even if there's a bullish inside candles. Check more examples. Just look at this here. It's a bullish pin bar. This is a bullish pin bar. It means that the price should proceed to the upper side. But what happens? The price actually comes down and closes below. It continues down and even closes lower, which means if you saw this trade here and then you picked the buy immediately, you could not have got anything. So we want to avoid things like this. We want to avoid cases where you enter trade and then instead of price going your direction, it actually goes immediately against you. We want to avoid anything like this. Move forward. This one. This looks like a very good pin bar. It's not a very good one though, but because there's a very big tail at the top. So if I was to trade this one after seeing this pin bar, I have to wait for this candle here, which is green, to close above the high of this candle. That confirms that we are continuing to the upper side. And when this happens, that the price now begins to close below the low of the previous one, like in this case we have a bearish pin bar, but the next candle actually has closed below, you should exit the trade which you took previously. and you should now enter a sell. Makes sense? This is one way you can learn how to trade pin bars correctly. Instead of just entering trades because there's a pin bar, observe how price behaves after that pin bar. If on the 1 hour chart you see a pin bar for upwards, then the next thing you see on a lesser time frame, such that the price begins to close below the low of the previous one, do not enter such a trade. Even if there's a pin bar, do not enter such a trade. But if there's a bullish pin bar, the next thing which follows is that the price begins to close above the high of previous candles. That confirms that direction, that we are indeed proceeding upwards. So you need to start looking for a trade in that direction. I hope that makes some sense. So the same thing applies pretty much the same way if you are doing inside bars. If you have an inside bar, a bullish inside bar is a candle which fits inside the previous candle. This is the definition. Assuming you have one red big candle like this, we expect that the next candle after this one should proceed to the lower side immediately. But if that does not happen, that the next candle actually looks like this, it's green in color, not the same as the previous one, and it is inside the previous candle in all aspects. We have the low of this candle here and the low high of that. Then you also have the high of the green one and the high of this one. All of them are inside the previous candle. Then this is called an inside candle, and what it means is that the people attempting to buy cannot go above the high of this one. It means we are supposed to proceed to the lower side. If you see something like this, use the same principle I've mentioned with pin bars. Use the exact same principle I've mentioned with pin bar. Wait for candles on a lesser time frame to begin closing below the lows of the previous candles. Then you'll be able to pick a trade in that direction correctly. That's the best way to confirm that we are indeed proceeding to the lower side or we are going to the upper side. Does that make sense? That should make a lot of sense. It should make a lot of sense if you understand exactly what I'm saying, that the close of candles are equally important as the opening of the candles, and the lows of candles are also very important. The lows and highs of candles are equally very important. So if you find that this setup like this setup means we're supposed to proceed to the lower side. If you find a setup like this that confirms that you're supposed to go to the lower side, wait for the close of candles on a lesser time frame to begin appearing below the low of the previous one. Then you pick that trade correctly. So that is an bearish inside bar, and this is a bullish inside bar. When you have something like this, a very big candle, something like that, a very big candle, and then we expect the next candle to also to be green. If it does not become green, instead it looks like this, this red, what this means is that we don't have enough momentum to close below the previous big candle. If you have something like this, this confirms that you're still proceeding to the upper side. But as I've mentioned with the pin bar, instead of buying immediately, wait for the candles on a lesser time frame to begin closing above the high of the previous candle. So if you have this setup, which means you're supposed to proceed upwards, don't just find yourself buying immediately, then you have your stop loss here. In most cases, you may have this as a buy, but the next thing, price actually moves to the lower side. So we'll not find ourselves buying something like this just because the setup shows a buy. This is one mistake that you need to avoid. Wait for candles on a lesser time frame. If you are doing 1 minute, 1 hour, you can now scale down to 50 minutes and check how the candles are closing. If the candles begin to close above the high of the previous candles, that confirms that you are proceeding to the upper side. And if it begins to close below the low of the previous one, do not enter any trades even though there's a buy on the 1 hour chart. So that is one simple way to confirm that we are indeed proceeding in this direction. Therefore, do not find yourself entering a trade earlier. Okay, just look at this. Let's get one example. We have this here. It's a very big move to the lower side. There's this big move. There's some retracement. There's a big move. Then we have a green candle which fits inside the previous candle. To sell this correctly, if you have to check this candle, the 15 minutes candle on this candle here, you'll notice that they were actually closing below the lows of the previous one, which means you are supposed to look for a sell immediately. So when that happens, that on the 15 minutes price begins to close below, or on the 5 minutes price begin to close below the lows of the previous candles, you actually are supposed to look for a sell immediately. Pick sell positions, hold on to those sells until the opposite happens. Opposite means price now begins to close above the high previous candles. That's when you get out. So look at this. So somebody may argue that this was a pin bar, but I don't encourage trading this one. If any part of this candle, the red one, is above the high of the previous candle, that does not qualify to be an inside bar, even though the low of the same candle is above the low of the previous one. That disqualifies it. We have this. Yeah, this is not inside. The body is small and fits inside the previous one, but the low is lower than the previous one. That means it's not an inside candle. We have this. This is an inside candle. We have this, an inside candle. So look at how this formed. This candle fits inside the previous one, but then the next candle actually moved upwards. If you are to check the 15 minutes chart on this one, you could have seen that the price were actually closing above the high of the previous ones. Therefore, you cannot sell just because this is showing you a sell. This is an inside candle. Yeah. And then we have this. This is an inside candle. And then you also have this as an inside candle. Then we have this as an inside candle. Then we also have this, a very good inside candle. Then there's also this one as an inside candle. And then we have this as an inside candle. So prices closing below of the previous candle, or prices closing above the high of the previous candle, is a sign that we are continuing to a particular direction. So it only confirms that if you are short, you're supposed to remain in that sell. But if you bought, you're supposed to remain in that long position. Another way to confirm direction is to look at the highs, which are these ones. Look at the high of this candle. It went up, then we have this high, continued down, came back. We have a high which is lower than the previous high. Look at this like this high, that high there, and then you also have this one here, this high, and then we also have this one. So if you look at this, if you have previously, we actually had the highest high. Then as price proceeds down, it retraces up. The high of the current retracement is actually below the high of the previous one. Then it proceeds down, the same thing happens. Proceeds down, the same thing happens. That confirms that we are indeed in a downtrend. Therefore, you need to look for sell positions. So this is one way you can confirm that you are proceeding to the lower. So if you see an inside candle, engulfing candle, or whichever candle that you are looking at showing you a sell, pick a sell confidently, because overall trend is in that direction. Does that make sense? I hope that should make some sense, that we are actually not trading because there's an inside bar or whichever name you can call that candle. We are trading because the trend is in that direction. So after you see that this is now an inside candle, we have an inside bar, we have an engulfing candle, we have a pin bar, or whichever candle you choose to trade. Confirm the trend first of all. And I've mentioned two ways to confirm the trend. If we have highs that are getting lower as price proceeds, that means we're in a downtrend. But if we have lows that are actually getting higher, that means we are heading to the upper side. It means we have an uptrend. Look at this. Let's get that straight away. Just a second. I'll not use that as an example. I'm going to look at April. Look at this. Then I want you to confirm exactly what this means, how this looks. Yeah. This low. Yeah. And it continues up. It forms a low which is higher than the previous one. Here. And it proceeds up, it comes back, and it forms even a low which is higher than the previous two. This very much confirms that we are proceeding to the upper side. So you don't have to look for a sell even if there's a bullish pin bar. Even if you have a bullish inside bar, bullish engulfing candle, or whichever candles choose to trade, if something like this happens, that the price keeps forming higher lows, that means we are proceeding to the upper side. And if price proceeds to close above the high of the previous candles, that confirms the same direction. We are still upwards. So you therefore need to look for a position that is in line with that trend. That's simply how to do it. So if you don't have an indicator, if you're not using an indicator, basically just relying on price action, the key things you need to look at is how a candle is closing. Are they closing above the highs of the previous candle, or are they closing below the low of the previous candle? Or do we have highs that are actually getting lower as price proceeds to the future? If that happens, that we have highs that are actually getting lower as price proceeds to the future, then that means we're in a downtrend. But if we have lows that are getting higher as price proceeds to the future, that means we are in an uptrend. Therefore, only remain with uptrends only. This makes sense. It may look very, very simple as I'm mentioning it, but trust me, if you can follow something like that, if you are trading pin bar or engulfing or whichever candle that you're trading, and you are able to observe how candles are closing or how lows are forming, you'll get it correct. You'll always find yourself in the correct trade at the correct time and the correct direction. That's the most important. The question, the main thing is not even to know many things. The main thing is to know what is actually happening. Are we proceeding upwards? Good. What am I supposed to look for? Things that are showing you we are supposed to proceed upwards. So after you observe the highs that we are getting higher as price proceeds, we are getting lower as price proceeds to the future, sell positions. If price now begins to do the opposite, that the lows are getting higher as we proceed to the future, look for buy positions. So another thing, if price begins to close above highs of the previous one, that confirms a buy. Continue looking for a buy. Price begins to close below low of the previous candle, that confirms a sell. So you look for sell positions. Thank you very much. That should bring us to the end of this webinar. So far we've not looked at many things. The reason I've not looked at all the entire, whatever name you choose to call all those candlesticks, is because the same principle applies. When you're trading price action, the most important thing is not even knowing the name of the candle, is knowing exactly where the price is going. And there is no better way to know that than to observe the highs, the lows, close of candles. Another thing which maybe you may want to use is volume, but I don't want to use that one now. I don't want to talk about that one. What you must know now is that understand what the highs and lows, what they mean, where they're headed. I have mentioned previously I've mentioned this webinar. Also observe the close, and if they are closing above the highs of the previous one, uptrend. If they are closing below the low of the previous one, but in a downtrend, so you look for a sell. Thank you very much. That should be the end of today's webinar. Meet again tomorrow at the same time.